Hi and welcome. You're listening to the X22 Report. My name is Dave and this is episode 1569A and today's date is May 16th, 2018, and the title of the episode is, In the Beginning, the Illusion Seems Real. In the End, the Truth Materializes. Now, before I get started, I just want to make an announcement. I uploaded a new interview with Stefan Schaus. It is on the X22 Report Spotlight YouTube channel. So all you need to do is go over to YouTube, type in X22 Report Spotlight. It will bring you to the interview, or you can come over to the x22report.com or newsentinel.com websites. Scroll down a little bit, look over to your right-hand side, and you can play the interview right on the site. Or you can go to Steemit, that is steemit.com/@X22Report, and you can play the interview on Steemit. Let's get into the economic collapse financial news. Now, we've been in this economic illusion for quite a while, since 2008, actually before that, but it really started to show its ugly head in 2008. And this is because we're at the end cycle of a fiat system, which usually lasts between 40 and 45 years. And here we are today, and basically what the central bankers have been doing is they've been keeping the system alive long enough to move us to their new system. And like I've said in past reports, there is a battle going on between the patriots, Trump, and the central bankers on where they're going to bring us and what system we are going to use. And we can see right now they don't have that much time left because the economy is completely breaking down. And we've been looking at indicator after indicator, and we talked about the subprime crisis, we talked about real estate, and let's go over some of these indicators because we can see they're getting worse and worse as time goes on. Now, last week, used car prices had their biggest drop since 2009, directly after the financial market meltdown of 2008. Right now, the auto market is showing signs of an incredible worry. We already mentioned that delinquent subprime auto loans are higher than they were last recession, and you can see this. All you need to do is look at the graph, and you can see that, yes, they are rising very, very fast. And what's really worrisome is that consumers are defaulting on subprime auto loans when the economy is doing well. And we mentioned that yesterday, where they're saying, hey, we don't understand this. Unemployment's very low. Everyone has a job. The economy's strong. Why are we seeing this? It's because basically we've been kept in this illusion for a very long time. They've been handing out statistical numbers, making us believe that this is the real economy. But what's happening right now is that the truth is materializing. We're seeing the truth come out, and these individuals are going to start to realize, well, wait a minute, let's look a little bit deeper and see what's really going on here. Are we really in a recovery? Is the economy really strong? And people are going to find out, wait a minute, I think we've been lied to. So what have the central bankers been up to? How have they kept us in this illusion? Well, their policies made the entire system fragile by getting consumers addicted to cheap debt through their easy money policies. They began tightening credit, which now is crippling the borrowers. Think of it this way. Imagine you're addicted to alcohol, and your bartender keeps giving you cheap drinks each night for months. Eventually, from drinking way more than you should have been, and more than you can afford, you now have a very high tolerance. But suddenly, the bartender becomes strict and starts giving you less booze. He tells you, sorry, but no more free alcohol for you. Problem is, you wouldn't have drank so much if you had to pay full price for it. Now you're left with awful withdrawals. And now you're scrounging around trying to find extra money because the alcohol is a lot more money, and you're trying to figure out how you're going to pay full price, and basically you're running into a problem. And the only way you can really afford to feel better is if he starts giving out free drinks again, or you're detoxified. And we know what that means. That means the bartender has to cut you off. And you know what happens when you're cut off. You go through a period where you're detoxifying and you go through withdrawals. The same thing's going to happen with the economy. I mean, just look at the collapse in auto loan growth since 2015, when the Fed began tightening with their end of QE and talk of rate hikes. Guess what happened? Everything started to decline. The auto loan debt declining. Why? Because people just couldn't afford it. As interest rates rise, it gets harder to borrow. They're tightening. And affordability becomes a huge problem. History shows us that when things start their descent into a collapse, the subprime market is the first to get hit. And what are we seeing right now? We're seeing the subprime market get hit. And it's getting hit pretty darn hard. If we look at housing right now, we know that housing had a small bounce, but we can see in April it has tumbled down negative 3.7% month on month. And starts have dropped. And it's worse than they expected. Now, this is kind of odd because this is the springtime. Spring, summer, usually a very, very strong period of time for housing. People start to look, flowers are blooming, the weather's getting warmer, people want to get into their houses before school, and this is when people start to look. Once again, we are seeing the same exact problems that we've seen in the past. Now, to put all this into context, starts and permits remain over 40% below their 2005-2006 peaks. We're not even halfway to where we were back in 2005-2006. We never recovered. So the driver of the tumbling housing starts is multifamily homes, which plunged around 11.3%. 3 of 4 regions posted declines in starts, led by a 16.3% decrease in the Midwest and 12% drop in the West. Now, when we look at mortgage applications and refis, what do we see? Well, we see the 30-year mortgage rate. Guess what? We're back to the 2011 levels. And pretty soon, we're going to be hitting the 2008-2009 levels. And this is not going to be good because what does this do? It pushes many individuals out of the housing market. And we can see already it's starting to take an effect on mortgage applications, refinance applications, all of it, because the demand is now falling. We are now back to the 2008 levels for mortgage refinance applications. That's how far we have dropped. I mean, it's amazing. And it's just getting worse. As the rates continually increase, it's going to get worse and worse. Now, we're back to where we started here. Back to 2008 levels. Almost the rate for mortgages is almost back to 2008 levels, getting very, very close. Now, there's a huge difference this time. The 20 cities that Case-Shiller looks at, those housing prices are above where they were in 2005, 2006, we were at the peak, which means the fall is going to be very hard in these cities. And once the corporate media starts reporting how bad this is, the rest of the country is going to get hit very, very hard. Now, places outside of these cities, they're not seeing housing prices continually move up. A lot of them have leveled off, and some of them that I've been looking at, they've been dropping in price. Traffic is really not there. It's kind of drying up. And we're going to see this continue on as we move throughout this summer, because as rates continually move up, there are more and more people being pushed out of this market. So we have fast rising mortgage rates and soaring home prices. What do you think happens next? Well, we saw it back in 2008. Again, we're living in an illusionary world. It's coming to an end. The truth is going to come out, just like it did in 2008, 2009. And we can see right now, both sides are scrambling because, yes, they would like to have a controlled economic collapse, but you always have that black swan or that outlier, which is the economy, which is the people, which is what is really going on in the true economy. Well, when that starts to break down, just like it did in 2007, 2008, the real economy, there were companies laying off. People were finding it hard to live on what they were earning. People were losing their jobs. They couldn't pay for their homes. The adjustable rate mortgages were increasing. And basically, in certain different areas, like in the eastern part of the United States, that got hit. California got hit. Then it trickled down to the south in Florida. And before you knew it, the whole entire country, Arizona, all of it, started to fall apart very, very quickly. We're going to see the same exact thing once again. This time, it's a lot worse because we've never recovered. We're in this illusion. Home prices in the 20 cities have been pushed up. It's a gigantic bubble. Mortgage rates are rising. It's kicking a lot of people out of the market, and people have been losing their jobs. People aren't making the same amount of money as they were. They don't have the same savings as they did, and they have a huge amount of debt. This is a recipe for disaster. And retail right now is not doing well. Stores are closing left and right. Once this thing starts to hit and it starts to decline rapidly, even faster than it is right now, it's game over. And we're heading in that direction. And this is what the Trump administration, this is what the central bankers are now facing, because this is happening a lot faster now than they thought. And they're rushing to gain the narrative, because before you know it, those fake statistics that they throw at us are completely meaningless, because people will realize what is going on. Companies will realize, listen, we need to lay off people. We can't hold on like this anymore. We got to let them go. The market's coming down a little bit. We're not making profits. And companies, prior to the market coming down, they laid off people. Companies are going to ask for bailouts. They're going to say, listen, we can't go on, bankrupt. And we're seeing bankruptcies skyrocket. So if you haven't prepared, I would start preparing, because it looks like we're at this end stage of this illusionary economy. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.